Well, good morning, everybody. First of all, I'll tell you just a little bit about my background so you get a feel for my perspective on the insurance sector. So many years ago, my background is psychology. So I look at the motor insurance sector from multiple perspectives, very human, very organisational, and a little bit of social as well. I am what is euphemistically called the generalist, which means I know very little about a wide range of topics. You've got all sorts of expert speakers here today, actuaries, marketing directors, sales directors, claims directors. I'm none of those, a glorious generalist applying my trade in insurance across the world. I've spent 10 years in the New Zealand and Australian market, and just to make you feel sort of slightly miserable, that market in the motor sector is typified by happy customers, an efficient supply chain, and a constant stream of profits for insurers. So that's what you're aiming for. Not quite there yet. So as I say, you'll have a wide range of very detailed speakers, but I aim to encourage you to sort of step back a little bit and say, well, before you get too excited, actually have a look at the broader social system of motor insurance and the broader economic system as well. I remember being asked by my boss when I was heading back to the UK a couple of years ago that my first objective, if I could just sort out the profitability of the motor sector for Insurance Australia Group. And I don't know if you were watching Comic Relief on Friday and Thursday as well. Just reminded of the scene where, is anyone watching where Jack D was kayaking down the Zambezi? Jack D, that well-known optimist, and he was asking a range of questions, as you'll ask speakers a range of questions today. And he was asked, so we're heading down the Zambezi in plastic kayaks, and tell me again your strategy upon being attacked by a rhino. Or a hippo, sorry, a hippo, rhinos don't swim, a hippo. So what you do is you show no fear and then you fight it off. So that's your solution to the motor insurance sector. Show no fear and fight it off. So I'm your gentle brake on a roller coaster of optimism. When I came back to the UK 2.5 years ago, the motor insurance sector had fundamentally changed. So some of those macro changes are literally on a walk out of Heathrow through a shopping centre. So through a shopping centre, you discover in the UK market that in the 10 years I was away, every single mobile phone provider used to wander past the Vodafone kiosk, the O2 kiosk, etc., has now been replaced by a personal injury kiosk, just in case you were grievously injured on the plane on the flight over. You also find that when I received the receipt for the taxi, you had the name of the taxi on the front, and on the reverse, you had an advert saying, if you have been injured during this journey. So which is called just-in-time manufacture on a supply chain basis. And finally, to be bombarded by an endless stream of adverts pushing price, pushing comparison, etc. So you realise that the market has fundamentally changed, and to a certain extent, UK motor insurers are no cheerier than when I left 10, 12 years ago. So I don't know about you. I've been in motor insurance now back in the UK for 2.5 years. Do you ever feel like this? The poor sort of orphan child of the insurance sector. So there's probably a time, I suspect, that the depth of desperation was probably about 12, 15 months ago, when it was at the height of the referral fee scandal, a lot of government pressure, rampant price increases for young drivers, bringing stakeholder pressure there, multiple competition inquiries, just a range of factors. I actually started telling taxi drivers that I worked in the banking sector. And this is at times how it feels to be in the UK motor market. And again, you're going to have some fascinating discussion on black box data, big data, renewal elasticity will come in at some stage. Somebody will tell you that smartphones are the future. Somebody will talk about the opportunity for integrated marketing campaigns to deliver more value to customers. And I'll bring you back, just fleetingly say, well, when you see that, just remember the history. This is the UK motor market historically. So somebody will say, I suspect that's true, but you are, of course, completely ignoring investment income. Entirely true. And I would just point out that if your investment income was actually turning this result into an insurance, then you shouldn't actually be in the insurance sector. You should be making yourself very, very wealthy elsewhere. So when we look at the challenge of the sector, we see long periods of probably misery, punctuated by moments of complete and utter insanity. Markets that operate at a level when 20 to 25% of the available premium is a loss. Then punctuated by the occasional moment of optimism. Perhaps somewhere around here, people are maybe predicting a moment of optimism here. These moments of optimism are frequently dashed, and it's interesting, if you look at the press over the last 6 months now, you see the press full of price decreases, the return of price-based competition, and I point to say the market is more efficient. Actuaries are playing a much greater role. They're actually predicting profitability and discounting before any money is actually made, which is a slight divergence from the past, where you actually had to see the money before you actually indulged in price-cutting behaviour. So this is a deadly market. Show this market in a Dragon's Den presentation. Show it to a group of shareholders, investors that don't know the UK motor market, and say, this is where we wish to apply our best capital, our best brains. They will inevitably reach the conclusion that unless you can fundamentally play the game in a different way, or the game itself changes, you should invest your time elsewhere. I just thought it'd be fun to run around Michael Porter's 5 boxes, just to see where we are today, because it does change a little bit over time. And again, it might bring you back to the reality of this is a desperately tough market. So apologies for all the MBAs out there. Competitive rivalry is how intense is the rivalry between existing competitors. And the kind of characteristics you note to actually identify that would be, what's the number of players in the marketplace? And a good profitable structure is typically 5 to 10. Intense competition is usually deemed to come at around 20 to 25 participants. Motor insurance, I have no idea. It is a lot. Another factor is divergent strategic priorities. Some players where it's their bread and butter, it's all they do. Some where it's an accommodation line to support other classes. And some are desperate to grow market share, some are downsizing. So a huge number of different strategic priorities mean that this glows red at the centre of the bubble. So possibly the only area where recent years have brought some good news. Threat of substitute products, relatively low. Although after Mark's presentation, you see that even there is a threat of alternative providers. Double-edged sword, high costs of fuel. Every motor insurer loves high fuel costs. Direct correlation to accident frequency, miles driven. A little bit of a tipping point there. Socially, when will there be a change? At the moment, very roughly, the same number of private cars are sitting in drives and garages being driven less. What happens when the customer decides that they shouldn't be driven at all? And you see large-scale reduction in the car park across the UK. We've seen fleet size diminish as larger vehicles come on the road, worked much harder. So there's a gentle drop of the vehicle car park. That could escalate markedly if the tipping point around fuel price or even social pressure is reached. Threat of new entrants, always a little subjective. You'd probably say low, without being too flippant. Collect a couple of actuaries, a decent system, a little bit of data, small data, medium data, big data, doesn't really matter. And you do actually have the ability to compete. It's a relatively easy business to actually enter. So if profit appears, you find that capacity comes into the market quite quickly. Bargaining power of suppliers. It's got a lot worse in the last 10 years. There's everybody in there. Try and describe to somebody that doesn't live and breathe motor insurance the supply chain that is motor insurance. I was presenting at an AGM a while ago, and a rather elderly customer put their hand up and said, Ian, I actually disagree with some of what you say. I think there's fantastic customer service in the insurance sector. When I had a crash, I was amazed how many people phoned me looking to help. And he said, I got a phone call from the broker, I got a phone call from the tow truck operator, a couple of personal injury lawyers, etc. Everybody was looking to help. This supply chain feeds many, many mouths. Those mouths may reduce slightly, but they're still going to be there. Personal injury lawyers, extremely influential. Most motor insurers now, you very rarely see conferences nowadays about reducing the cost of repairing vehicles. Occasionally you do with aluminium, new plastic construction, etc. But 60 to 65% of premium spend goes in bodily injury claims. The notorious whiplash claims, PPO payments escalating, etc. So the bargaining power of suppliers is high. And then finally, I always like to end on customers, because customers are the ultimate arbiter of how competitive your marketplace is. It's a tough market out there. 20 years ago, you used to look after your customers, treat them well in the event of a claim, not penalise them with grotesque price increases. So when you wanted to increase price, you moved it by 5 or 10%, and you were rewarded with, I'll have you reminiscing now, 80% renewal retention, 85, maybe even 90 in a rural area. People now set the bar at around 55 to 60% and say that's strong renewal retention. So the bargaining power of customers is exceptionally high. And again, just let me put you in the customer's shoes just for a second. Because you're very senior people, so perhaps you don't always follow the customer journey according to your policyholders. So this is motor insurance according to Martin Lewis. I recommend his website, actually, very entertaining. And a wide range of opinions. So yes, there's everything on where the baked beans are the cheapest, switch your energy every 3 months, etc. But this is the recommended journey for buying your car insurance premium. I'll spare you the detail in terms of the pros and cons. That really doesn't matter. So this is a website and an expert that is widely regarded as extremely influential with customers. And this is the recommended journey. So sit there as a pricing statistician or an actuary and feel the pain. So his recommendation, you start off with Money Supermarket. No idea why Money Supermarket is first, and if you're Money Supermarket, well done. But then you don't stop there. So many insurers are here thinking, oh, it's going to be tough. We have to be top 2 or 3 within one of the leading aggregators in the market. But no, you sweep down, because that only gives the cheapest quote 76% of the time, apparently, according to Mr. Lewis. You then move into confused.com to increase your chances. Then you don't rest there, because that's only 2 providers. Then you move into Tesco Compare, because they'll have some extra cheap prices to maybe from 88% to 93%. Then you move on to Go Compare, because that increases your chance of the cheapest available quote within this market of many hundreds of motor insurers to 97%. Then you keep moving, because it's a complex market with different strategic priorities, as evidenced by the Michael Porter's box. So we actually say, well, there's a couple of people that don't play this game in quite the same way. Let's check the way they play the game. So you have to call up or go online to Aviva, Direct Line, check out their prices, etc. And then just at the end, there's the phrase which I love, which is try to really nail down all quotes, sort of an indication that whatever is the cheapest, there might just be that extra bit left. If you still haven't found a deal you're happy with or want to push the envelope, not quite sure what that means, I have to say, there are some more options to try. Have a go in there. So the Total Search Recommender takes well over an hour. It will be accessing hundreds, if not thousands, of insurance quotes. And then if you actually win the business, you are the underwriting organisation that wins that piece of business. You are the cheapest, probably, of several thousand quotations. You have to work out just how lucky you've been. Are you ever going to make There are now economic students studying the UK motor market as their closest thing yet to the perfect competitive marketplace. So I leave you to actually do the summary for yourself. It feels tough to me. It doesn't feel as though it's got easier in the last 5 years. But then I have heard the phrase, Ian, as always, too pessimistic, too focused on the billions of losses of previous years. It's all going to improve going forward. The climate is going to improve. You've probably worked out the theme that this is not the most optimistic presentation. I'll leave that to the inspiring speakers later. And this is a slide that I didn't know what to do. There's so much going on. So people ask me that simple question, is the environment going to get better because of regulatory, social change? And the answer is, I don't know. But you put all that together, it's a very complex picture. It would be bad enough if we were just absorbing the gender directive, but there's whiplash consultation coming out, MOJ portal, Jackson's being implemented, Ogden consultation, got competition inquiries somewhere out here in sort of 14 or 15. You've got Solvency 2, which I couldn't place it anywhere on the line because it doesn't go anywhere on the line and probably won't for a long, long time. But somewhere it's out there, adding complexity and cost to organisations, and a great deal of value in case there's any regulators in the audience. We have PPOs, certainly squaring up the reinsurance sector, much more concerned about PPOs than the primary market at this stage, but that's impacting on reinsurance costs. We are seeing a plateauing pricing increase. We're seeing a recession that we may have gone into triple dip recession. We definitely have if you're Labour, we definitely haven't if you're Conservative. And ongoing levels of fraud. If you saw a fraud heat map, many of your organisations will have fraud heat maps that you probably first produced 10, 15 years ago. And without being unkind to any localities, it focused on, well, it actually focused on the areas like the city I come from. I'm from Bradford, because somebody has to. And that would have been a fraud hotspot, as would some areas of Birmingham and places like that, etc. You do your fraud hotspot today, it's virtually everywhere outside Cornwall. And that's just because they've not got down there yet. And so fraud is everywhere. Every one of you will have an organisational fraud strategy to actually combat underwriting fraud, claims fraud, etc. So you add all that together, and I love that little conclusion. Impact on profitability, not immediately clear, which means that's devastatingly complex. And can you actually prejudge whether that marketplace is improving or not? If you take one you'd have thought the most obvious, the ban on referral fees. Now you'd have thought, that's clearly a game changer. That will be different. Well, I won't break any confidentialities, but I've already been contacted by multiple organisations saying, you don't want to worry about that too much. No. We'll find a way around that. And we think it's legal, or certainly it's not been tested as illegal yet. We'll find a way around that. And if you are worried, don't worry. There's plenty of other referral income in terms of credit hire, etc. I could add in my own complexity here and say, FCA, add-ons. So what keeps the motor market going to a certain extent? The actual revenue stream from add-on legal expenses, scratch and dent, etc. There's going to be a fresh FCA focus there. So any profitability in the sector at all is actually at risk. So if I was being optimistic, I'd say that represents a very gentle improvement in environment. But it is a gentle improvement in environment. Telematics, everything I know about telematics on one slide. So this will be covered in more detail, but I do enjoy the dynamics that very occasionally I bump into somebody from government, and if they've been well briefed, they'll say something about looking forward to telematics. We're looking forward to the cost of motor insurance for most people in the UK falling. Yeah, hang on. Let me take you back to our economics chart. So actually if you think that cannot work, that insurance is fundamentally a pool. If 20% of the market are receiving a fundamentally lower price forever, then there has to be some compensation elsewhere in the marketplace. So whenever you see government saying telematics will bring lower prices, the answer is yes, and higher prices too. But that tends to be forgotten. That data ownership issue is a major issue. Absolutely certain that Mark is correct, that individual ownership of data is fundamentally the only acceptable answer in the UK legal system. But there'll be lots of discussion around standards, transmission, storage, etc. And one of the issues you'll be grappling with, I suspect, later today is, can you imagine how much data there is on a single 10-mile drive to work about speed of acceleration, deceleration, top speed, gear selected, etc. If you actually extrapolate that over 10,000 miles, you'll probably have enough data to crash most PCs, and then you do that for hundreds and hundreds upon thousands of customers. This isn't a data mine, this is a data mountain. And will organisations be able to pick their way through and actually gain insight? Interesting, I do wonder if some of the benefits aren't some of the simplest things. In the young driver sector, and everyone in the telematics sector tends to focus around young drivers, actually one of the simplest improvements made isn't so much monitoring driver behaviour, acceleration, deceleration, etc. It's the single expedient act of banning driving between 11 p.m. and 6 a.m. That causes accident frequency to plummet. And it's for the reason that all of you with 18 and 19-year-old children know you're banning the nightclub run, the dreaded showing off, posturing in front of boyfriend or girlfriend, and social pressure around speed. So telematics does have some very simple clinical wins. Customer acceptance. And I come back to my psychology background and go, not sure. Seat belt, yes, but at the end of the day, it's just a piece of nylon across your chest which clips in. Something that tells you where you are every minute of your driving experience, how you've driven every mile. And it will trigger those discussions inevitably, which is, you've monitored my driving and I've not crashed. Your black box tells you you're a terrible driver. You know, just as my wife would say, I've never crashed, I've been witness to hundreds. How do you actually talk to that customer? It's the conversation you have. How do you say you're a poor driver even though you've not yet had a crash? If I was to ask you a quick question here, and this requires honesty, not political correctness, can you please stand up if you view yourself as a better than average driver? Please stand if you view yourself as better than average. Okay, please sit down. That's the worldly wiseness of the motor sector. If you do that with the general population, you'll find that about 75 to 80% of people stand up. In the motor sector, they were probably fearing the next question. So 75 to 80% feel that they will benefit from anything that objectively measures their behaviour. So the psychologist says that's at least 25 to 30% destined for disappointment by the telematics industry, because they will be measured as at best average and probably statistically not average. The other little stat which you should worry with, that people standing up as measured tend to be worse drivers on average. Don't worry about that. I'm sure it doesn't apply to this room. So lots of that tricky marketing and psychology things. Pricing, a tool for more accurate pricing. Thank goodness we need one of those. The UK sector has more pricing factors than any other sector in the world. There will be somebody in this room that thinks that they have a new rating factor, whether it's birth sign, choice of hairdresser, whatever, that will give them a unique, distinctive advantage. I remember, which demonstrates my age in the motor sector, I'm afraid, somebody saying, we've got it, it's age of vehicle, that will give us. And then somebody said, no, you haven't got it. We've got it. It's about inner postcode. That will drive the change. So, of course, telematics adds information. But a cynic would say by the time you get to about age 40, we actually know everything there is to know about your life virtually. From your occupation, from your driving experience, your choice of vehicles, etc. So of course it's a tool for more accurate pricing, but there's lots of those. And what's to prevent it being swamped by the tsunami of competition in the UK marketplace? So it will require new skills to actually model, and there will still be a requirement for that proportion of the population that say, I do not wish my driving to be monitored. And it's unclear whether they are actually better drivers than average, worse drivers than average, or just a little bit more stubborn. So finally, is telematics here to stay? Yes, of course it is. The history of technology innovation is, it does take time, but technology innovation is always inevitably used. Will it allow customers to see value beyond price, or will it actually just bring an extra dimension? Will Martin Lewis be saying, make sure you access at least 20 different telematics insurance providers, either separately or through aggregators? It's interesting that telematics will make no inroads into the profitability of the sector until customers think differently about their choice and purchase of insurance. Somebody once said to me that choosing your insurer is actually more important than your choice of husband or wife. And so that's outrageous. How can you reach that proposition? The answer is, because if you choose your insurer incorrectly, you'll only lose half of your net assets. Choose your insurer badly and you lose everything. And that somehow seems to have been lost in the competitive turmoil of the UK sector. So, yes, here to stay. Yes, personal view, probably heading into mainstream. Lots of issues around customer acceptance, lots of issues around how do you avoid the motor market just losing money in a much more intelligent, technology-driven way. So there was a question underneath my little bio in terms of, will telematics avert a price war? And the answer is no, but I thought that would be a short presentation. The answer is no, but in this room, you might. Thank you very much.